In this recording, I will be analyzing questions that cover introductory financial accounting concepts. Let me start with the accounting equation. Now, the accounting equation is simply stated as assets equal the liabilities and stockholders' equity. So the assets of a company equal the liabilities, which are borrowing, and shareholders or owners' equity. Remember that the assets are the uses of funds. Liabilities and equity are the sources of funds. Now, from the above equation, we can also express liabilities as assets less stockholders' equity. Now, for every transaction, the accounting equation must hold, which means that for every transaction, assets should be equal to liabilities plus stockholders' equity. So if the left-hand side of the accounting equation increases by, let's say, 10, the right-hand side must increase by 10 as a result of the transaction. If the left-hand side does not change, zero change, then the right-hand side should not also change. There should be zero change. So we'll be applying these concepts as we analyze transactions and then as we look at some problems. So let's begin by looking at a problem. Now, on October 2nd, 2011, Starbucks Corporation reported on its Form 10-K the following in millions. Now, the Form 10-K is the annual report filing for U.S. publicly owned companies. Now, Starbucks reported total assets of $7360.4. Total stockholders' equity of $4387.3. Now, the liabilities information provided is total current liabilities, which is $2,075.8. Now, recall that total liabilities has two components: current liabilities and long-term liabilities or non-current liabilities. So in this question, we are only provided information about a portion of the liabilities, not all the liabilities. And the question is, what did Starbucks report as total liabilities on October 2nd, 2011? We are asked to determine total liabilities. Now, we need to use the accounting equation to answer this question. And the accounting equation again is assets equals liabilities plus stockholders' equity. So let's look at the question again. Our assets are 7360.4. We do not know our total liabilities, but we know total stockholders' equity. So we can plug it into the accounting equation, and that's what we have. So total liabilities will be the assets minus the equity. And that's what we also have here. Total liabilities will be assets minus the equity. So if that is the case, we can determine total liabilities to be 2973.1, which is answer C. Now, we are not asked to determine long-term liabilities, but based on the information provided, we were able to determine total liabilities. And from total liabilities, we can determine long-term or non-current liabilities for Starbucks. All we need to do is subtract the current liabilities from the total liabilities, and that will give us the long-term or non-current liabilities. We are not asked that question, so we will just discuss that just to make sure we understand what to do if asked such a question. So let's look at the second question. Sales for the year equals 108,229. Net income for the year is 13,144. Income from equity investments equal 3,309, and average equity during the year is 47,556. We are asked to determine return on equity for the year. Now, return on equity is the overall measure of performance of a company when we look at the shareholder and the shareholders' return. So from the perspective of the shareholder, return on equity is the amount of profit for every dollar invested in the company. And we calculate it by dividing net income by average shareholders' equity or stockholders' equity. So net income divided by average stockholders' equity gives us return on equity. And one way to remember the formula for return on equity is to first of all remember that the return according to the books or in accounting is a measure of profitability. So we expect to have a measure of profitability like net income in the numerator. Now it is the return on equity, so stockholders' equity. So for every dollar of stockholders' equity, what is the return or what is the profit? So average stockholders' equity is in the denominator. Now, to calculate average stockholders' equity, assuming we were not given that information directly, we use the beginning stockholders' equity plus the end of the period stockholders' equity divided by 2. Now, we do this because the balance sheet from which we get shareholders' equity information reports the balances at the end of each period. So for example, for the year 2015, the shareholders' equity in the balance sheet will be the shareholders' equity balance, for example, on December 31, 2015, that day only. So it is important to rather calculate the average numbers for balance sheet accounts, because the average will represent the average performance or the average measure over the period. So beginning balance plus the end of period balance divided by 2. Now the beginning balance is determined from the previous period's amount. So for example, the beginning balance for 2015 shareholders' equity will be the ending balance of the previous year's or previous period's shareholders' equity. So December 31, 2014 shareholders' equity from 2014 balance sheet will be the beginning balance for 2015. That is, for For example, January 1, 2015. Now in this question, we are given the average directly. So all we do is we use net income and divide it by average equity. And once we do that, we get 27.6%. That is 13,144 divided by 47,556.